Important story. Let's in fact revisit what the SEBI chairman Tuhin Kanta Pandey had to say on the sidelines of that FICCI annual capital markets conference. He said that there is a need to increase the tenure of equity derivatives, and as you can see, the stocks have been hit. Listen in to what he had to say.
See, improving the tenure really means that, whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So and we'll have a consultation paper
coming? Yes. Nothing will be on,
By when will the consultation take?
No, I mean, I can't
is
give
it
you
like
the...
in a month,
no,
in a week?
No, I can't tell you that, but that's the thinking process we have.
Your preference is for a longer...
Yes, I mean, that is qualitatively we have to see, but we have to calibrate it. So if you really look at my statement, where I said in a calibrated manner.
Okay, a calibrated manner, and also it would be in consultations. That's Lata Venkatesh, in fact, quizzing the SEBI chairman there. But let's in fact get in Rajesh Baheti, the MD of Crosseas Capital Services, joining in for a quick take on and his thoughts on this. Rajesh, welcome to the show. Increase in tenure for the derivatives. What is your sense? Currently, it's just a consultation paper, but what's your sense in terms of it coming through?
Look, just a week ago, I think there was a very swift denial that SEBI is even looking at further reducing the tenure, a number of derivatives allowed to expire within a week, and that they're not looking at bi-monthly contracts as well as longer dated maturities. But yesterday's money gaming bill was a little bit of a giveaway into the government's thinking that they're willing to sacrifice revenues, they're willing to sacrifice free markets in order to protect what they think is the lowest rung of the middle class from getting habituated to these things. So if there's a diktat from Delhi, I don't think the SEBI chairman really has much choice but to toe the line and talk about increasing the tenure of derivatives.
Absolutely. But Rajesh, then what about the volumes? Because anyways, you did see that impact coming in terms of volumes. Now, if this actually goes through, then what about that?
Well, the government is very clear that what they perceive as a larger good takes precedence over, individual companies or individual financial implications. They are okay to shut the entire gaming industry down. So if they think that the capital markets can live with half these volumes and it's fine with them, then I guess that's the way the thinking is, and that's the way we're likely to go in that direction.
Okay. In case weekly expiries are removed or the tenure is changed, Rajesh, give us a sense in terms of, and this would be off the cuff ballpark figures on what the impact of the volumes could be, according to you.
So we all know that 85% of the revenues of the discount broking houses as well as the exchanges are driven by derivatives. If the volume halves from here on, then we're talking a 40%, 35 to 40% hit for the NSE in terms of revenue, and maybe a 50 to 60% hit for the BSE in terms of their revenues. And similarly, it will play out for the discount broking houses, the full service brokerages that are more investing oriented or wealth-oriented will be affected to a lesser extent. And even our industry, I work in the prop trading industry, and we would also be affected to the extent of 40-50%.
So this would be a huge material change from what we've seen in terms of how the markets have expanded since 2020. It would be a huge material change in terms of revenue, in terms of the impact that we could see across sectors which are dealing with the capital markets.
Absolutely. Even in 2020, we did have the weeklies. So if you're doing away with the weeklies, we're not just going back to 2020, we're probably going back to 2015 or so. So although the overall volumes in the monthlies will be larger than what they were in 2015, but you're talking about taking us back not just 3-4 years, but many, many years.
Okay, just not 3-4 years, but many, many years. And, just just want a clarification. You said there could be a 35 to 40% hit on NSE and 50 to 60% hit on BSE. Does that indicate in terms of this derivative revenue?
Yeah, I'm talking overall revenue because assuming that there's 85% of their revenue is derivatives.
Revenue, right? Not the volumes.
Yeah.
Okay.
What could
Volumes and revenues, I mean, they're gross revenues. I'm not talking about share prices, I'm talking about the revenue.
And I'm assuming that would be the impact on the broking firms as well, that the extent of revenue hit?
Yeah, the more the discount broking industry, the more the discount brokerage you are, the bigger will be the hit. If you're a full service brokerage, largely focused on the cash segment, then maybe the hit will be much less.
Could you put that into numbers for us?
Similar. I mean, if the overall industry shrinks by 40%, we're talking the largest brokerage is shrinking by 40%, and the full service brokerages maybe will have a 10 to 15% hit.
What's the likelihood of this happening? I know it's a consultation paper, but based on what we are discussing, the revenue impact is so severe that what is the likelihood of something like this taking place?
I don't know. I mean, the money gaming bill came out of the blue. I don't think even the gaming industry, I'm not in that business, but it came out of the blue. I don't think that industry was expecting things like this. So I'm concerned with the thinking. If the thinking is that we want to protect these losses at any cost, either to the government in terms of tax revenues or to the businesses, underlying businesses that facilitate this, then once a decision is taken at the top, there's pretty little you can do about it. The industry will survive, unlike some other businesses, but it will be severely dented. And we're not talking about going back 2-3 years. We're talking about going back maybe 7-8 years in terms of where we would be.
Absolutely. Just throwing us back, back to a decade and around that mark will be a bit of a concern that everyone will watch out for. Rajesh, thank you so much for joining us and giving us an understanding in terms of, what we are watching out for now, especially if this consultation paper that has just come in for the equity derivative front. And that is one thing that is seeing a fall in terms of the stock price of BSE, Angel One, IIFL, all of them under pressure today. But on that note, we're going to step into a very short break. We'll get you more on the markets and stock-specific action on the other side.